Hi, my name is Jan Hopwood. If you listen to this webinar, you're eligible to open an account with us where you can save and borrow directly through your salary. If you'd like to join us, please visit our website on metromoneywise.co.uk, click on the Join Us button. You just need to have your payroll number to hand. Now today we're going to talk about credit checks and credit scores. Most of us at some stage in our lives will be subject to a credit check. This can vary from an application for a mortgage, renting a property, financing a car, mobile phone, contracts or applying for a loan. If you have a poor credit score, you potentially get charged a higher APR rate and not offered any credit at all. The higher your credit score, the more successful you will be in acquiring credit and at a better rate. That is why it's so important to aim to have a good credit score. The three main credit agencies the potential lenders will use will be Experian, TransUnion and Equifax. Your credit score is created from the information held in your credit report, also known as your credit file. The information held on your credit file might be used to decide whether to loan to you or not. For example, if you have a poor credit history, lenders may be hesitant to lend to you, and the ones that do are likely to charge a much higher APR as they see someone with a poor credit history as a higher risk. It will also determine how much they are prepared to loan to you and how much interest to charge. The most up-to-date information on your file will have the most impact. This is because lenders will be more interested in your current financial situation. That said, your financial decisions, good or bad, for the last 6 years will remain on your record. Now we're going to talk about soft credit checks and hard credit checks. A soft credit check is an initial look at certain information on your credit report. Companies perform soft searches to decide how successful your application would be without conducting a full examination of your credit history. Crucially, soft searches aren't visible to companies, so they have no impact on your credit score or any future credit applications you might have. Only you can see them on the report, and it doesn't matter how many there are. What is a hard credit check? A hard credit check happens when a company makes a complete search of your credit report. Each hard check is recorded on your report, so any company searching will be able to see that you applied for credit. Too many hard credit checks over a short period of time can affect your credit score for 6 months, reducing your ability to get approved for credit in the future. Now, how do I improve my credit rating? Make sure you're registered to vote and you're on the electoral roll. Check for mistakes on your file. Pay your bills, especially mortgage bills, utility bills and council tax. Make sure you have enough money in your account for your direct debits and standing orders. Check if you're linked to another person. Do not carry out numerous checks for loans in your name. Check for fraudulent activity. If something on your credit report is wrong or does not apply to you, contact the reference agency to have your file updated. For example, if someone has applied for credit in your name without your knowledge. County Court judgments, CCJs. Receiving any County Court judgments for debt will seriously affect your credit score. If you're having problems keeping up with debt repayments, seek free debt advice. Citizens Advice is a good place to start if you experience problems with debt. High levels of existing debt. Ideally, you should pay off any outstanding debt before applying for new credit. This is because banks, credit unions and credit card companies might be hesitant about lending more if you are still in debt. Moving house a lot. Members may be hesitant if you have lived at numerous addresses over a short period of time. Maxing out your overdraft and credit cards. How you use your available credit can be warning signs for potential new lenders. Being consistently at the max of your overdraft or the limit of your credit card can be a barrier to applying for a loan. Usually, using less of your available credit will be seen positively by lenders and will help increase your credit score. Using the credit card sensibly. You may have never been in debt in your life and still have a relatively low credit score. This is because lenders need to see your ability to repay. So some people have a credit card at 0% interest and pay a specific purchase each month, like petrol or food shopping, and pay it off every month. When credit cards are used sensibly, it can be a potential option to improve your credit score. I hope you found this useful, and for further information, please visit our financial wellbeing section on our website. Also, please feel free to ring us at any time if you have any questions, and our experienced staff will be glad to help you if they can. Thank you for listening.